you have an LLC and you're looking to scale your business this year by accessing business funding, these are going to be the exact steps that I will focus on. In this video, I'll lay down exactly what the banks are looking for, and I'll also give you a couple of non-risk NICS codes that will make the difference. It's kind of like night and day for you in your funding journey. If you're new to my channel, my name is Chess. I've secured well over 400K in total business funding for my businesses, and I help business owners and entrepreneurs just like yourself secure funding for their business. So that's how you know everything I teach here is based off real world experiences, either from myself or from my clients. So first, let's talk about how to properly classify your business can make or break your funding approvals. So first, one of the biggest mistakes business owners make is misclassifying their business industry. And your industry classification, known as the NICS code, plays a huge role in whether you get approved for a 5K limit or for a 50K limit. And you can have the perfect business name, the perfect bank with the best financial institution. You can also have the right structure, LLC or your corporation. But if your industry is misclassified, it could result in an automatic denial. So why does your industry code matter? Well, first, lenders like to categorize industries into three main risk levels. So we have our low risk industries. These are businesses that banks favor, such as a service, healthcare, or maybe even technology. We have medium to high risk industries. These are going to be businesses that require additional documentation, like your transportation, your real estate investment, or your retail industry. We also have restricted industry, which is going to be industries that banks often refuse funding, like gambling, crypto, anything that's you think is illegal is not going to work out. And if your industry falls in a high risk industry or restricted category, that doesn't mean you're out of luck. It just means that some banks they will specialize in lending for your specific industry. And your job is to find out the right banks that align with your business type. So here are some NICS codes that you may use depending on your specific industry. We have 541618. This is for any type of service business. We have 541690. This is for anything like construction, real estate, auto rentals. And we have 531311. This is any kind of business where you're doing fix and flips, Airbnb, auto rentals. We have 545100. There's going to be anyone that's doing any type of e-commerce business. And we have 541614. This is anyone that's doing trucking, delivery, and heavy equipment. I would try to stay away from the 541611 NICS code at the moment. This is going to be for consulting, as I've talked to my bankers and they've been telling me that since everybody has been using that code, the banks have been a lot more strict when doing the underwriting process for the 541611 industry. And since a lot of business owners have been using that code to kind of game the system, the banks are starting to notice, and we have a lot of business owners defaulting on their funds. And now the industry is classified a little bit more on the riskier side of things. So be careful when using that code, especially if you are in the consulting industry. So now that your business is properly classified, let's talk about choosing the right banks for your LLC. So before we talk about which bank is right for your LLC, I would like to add one more thing when it regards to your NICS codes. If you do believe that your NICS code and you did your research that is a bit more on the riskier side of things for you and for the banks, we could do something to change the NICS code. And we have to make sure that we do classify it in the correct industry as well. For example, if you do trucking, it wouldn't be very advantageous to you if you say you're doing consulting. So let's kind of move it in the right direction of the NICS code without, kind of lying to the banks. Let's do this the correct way. So if you are in a riskier side of things, like trucking, for example, and you do want to change it to a non-riskier trucking kind of NICS code, it's very simple. You can either go into the branch and straight up just talk to a banker and let them know the nature of your business has changed. Let them know the NICS code you want to change it to. It should not be a problem there. I've heard some people being able to just call in and do it, but most solid way is to go into the branch and let them know, let the banker know that the nature of your business has changed and you'd like to change the NICS code. Haven't seen any errors there, but try it out. It should help you out significantly. Okay, now that your business is properly classified, let's talk about choosing the right banks for your LLC. So, First of all, not all banks and credit unions or financial institutions are very startup friendly, and some won't even work with new businesses at all. So regardless of this and how well structured your business is, we'll go over choosing the right banks for your business. And if your business is under a year old, find a bank that caters towards a startup or new business. If your bank is 2 years and plus, look for banks that offer larger credit lines or business line of credit for established businesses. Now, what I would do is always build relationships strategically. Any type of relationship, we always want to build in where we see a longer term goal with them. Just like dating, if you're dating someone and you don't see a long term goal with them, you wouldn't go ahead and marry them, right? That's right. Now, why do you need multiple banking relationships? Well, first, we could diversify our funding. For example, if one bank's deny you, then you can apply with other banks and get approved in a shorter amount of time. Number two, different banks have different lending criterias. For example, some banks require higher reporting revenue, while others work with lower business revenue. And last, banks do have different loan terms, and by comparing your options, this will allow you to secure better interest rates and terms. Or, as I like to say, you're the one that gets to pick and choose. And here are some pro tips for you to balance your banking relationship. First, I wouldn't rely only on one bank, be super flexible. Don't rely only on your small banks and lenders, they may lack large credit lines options for you. Or, in other words, they may waste your time. uh, and last is to diversify your accounts to maximize your funding opportunities. This means to have multiple relationships with multiple banks. Once you have the right banks in place, let's talk about the importance of leveraging your liquidity to strengthen your business credit profile. So, first and foremost, opening an account isn't enough for you to strategically build a relationship with the banks. So, banks, they do track how you manage your business funds. And if you have poor cash flow management, it could get your account flagged or even shut down. I've heard this way too many times. So, here's how you could build a strong liquidity and relationship with the banks. First, we want to maintain a balance of at least $2,000 in your business checking account, letting it sit there for at least 20 days. You want to avoid hitting zero or negative balances in your debit account. Ideally, you want to use the account for business expenses. You want to have at least 5 transactions on your debit account. And you want to use a payment processor for the business. Ideally, it helps build a business relationship with the banks. You want to set up auto pay for your business expenses like subscriptions, your meals, you pay for gas. This also helps to never miss a payment with the banks. And how banks evaluate your daily balance. If your balance frequently drops below $500, banks may see you as a very high risk borrower. And your average monthly balance, I recommend maintaining at least $2,000 in there because it proves your approval odds. And your transaction activity, same thing I told you before, they do like to see steady transactions rather than those with large but infrequent deposits. So here is how I would personally do this. I will always ensure that my business accounts has steady transactions. I will run my business operations with this account and the expenses through there too. Even something as simple as paying for a business lunch, your gas, or subscription software through the business accounts, it does help strengthen your banking relationships with the banks. I also want to make sure that when I'm applying for any type of funding, my accounts look fundable. What does this mean? It means showing consistent deposits, a strong average balance, because banks love to lend to business that appear stable and have great cash flow. All right. So let me give you an example. I have two business owners. They have both the same credit score. They're in the same industry classification, and they have same. They're at the same business bank. So what is the difference? So business owner A, his name is John. He has $10,000 in his account. He runs through his transactions and account and makes very good payments. Business owner B, his name is Logan. He only has $100 in the account and he doesn't run his operations through there. And his business account sometimes gets negative. Who do you think the bank is going to lend to? Obviously, the bank is going to lend to the business owner with a better business profile, more liquidity, and just in general, a better business. So they will lend to John. Sounds familiar, right? Great. If you found this video valuable, share this with someone who needs to hear about funding to scale their business this year. And if you're super serious about getting 100K in business funding, apply to join my mentorship or my Done For You program in the links in the description below or in the pinned comments below as well. All right, this is Cashflow Ches. I'll see you guys in the next one. Peace.